Hi, welcome to the Market Alert for Wednesday, the 15th of April 2020. So yesterday, gold jumps continuing to move to the upside quite strongly. Crude dumps, so much for the deal that was done on Friday of last week, and the Nasdaq squeezes to best run in 5 months. Again, the money that's being printed at the moment is doing what it did before. It's finding its way into the markets to the 1%. As opposed to helping those that really need it, i.e. small businesses and the public. No surprise to me or whatsoever, because that's what it's been for the last 10 years. Let's have a look at yesterday. We'll start off with the daily chart. The market moving through the 62% retracement, still above the 5-bar moving average at the moment. We could get some corrections before we move higher. But we'll come to that in just a moment. But the 76% retracement is going to be the crucial area for this market should it move higher. And that's going to be dictated by tomorrow's news, to be honest with you, which is the weekly jobless claims, because every time that these have been released, even though it's over 5 million each time, or 6 million has been the case, the market has just moved higher because the Fed actually straps on with the bad news some other bailout program. Last week it was a 2.3 trillion bailout of small businesses, which then allowed the market to move higher. But it will certainly be interesting to see how these figures come out tomorrow. I mean, it's just absolutely dire. To have so many weeks, this will be the third week of 5 or 6 million. Taking it way over 20 million job losses if the forecasted figure comes out as correct. So it'll be interesting to see the market's reaction, whether it can move higher this time on this or we get a correction to the downside. But all very interesting as everything unfolds on a daily basis. The Fed have been very quiet this week, for sure. So yesterday the market opened, it moved down towards the 50-bar moving average. There was a lot of selling around at the time, but they managed to bring the market back. This was followed by some buying and profit taking along the way, and eventually the market ran out of steam. It reversed, and those that wanted to offload some of their cash positions did so, bringing the market right back to the 200-bar moving average. We see the market being tested at this level as well. And then we see the market retrace for a 76% retracement, which again is no surprise. So you'll see there right on the 76-78% area, depending which ones you want to use. And then the market retraces back to the 50-bar moving average and the 20-bar. And then we get a triple top across here, more or less. With prices then retracing to a double bottom here in a channel. And then, of course, the usual end of trading session. The market's tested. We're close to the 200 MA. We see the buying come in with the green bar there, and they just ramp the market up for the close there. So the market finishing up about 500 points yesterday. And then overnight, prices have drifted down to the 200 MA and the DP level. You can see that eventually once we broke through, it's now become a bit of resistance. But it had to drive through the 200 MA to get back above, but nothing to move it to the upside. So back down to the 200 MA, and then you've got selling to come through. And now we're heading to a crucial area here of the DP level, which I'll be watching closely, because if this breaks, we could see the down moving down to retest not only the 5-bar moving average, but also yesterday's low. That's for sure. So we'll see how that pans out in the pre-market session as well. On other news, we've got the implied volatility. This dropping down as well to 33 from 43 on Monday. So again, coming down to those lows. So certainly there's no sort of danger there at the moment of the market moving back to the downside. We've got about, if we look at that, it's about a 62% retracement from the move up there to the move back. It looks around about 62% for the implied volatility, and there you can see we're still green at the moment because, as I said before, we're actually get the fingers right here at the moment, I'll be able to, there we go. Yeah, we're below the 20 bar moving average there with the implied, and above the 20 bar moving average in the prices there. Okay, that will do it for this one. Like I say, we'll see how things pan out. There's news today. What have we got? Retail sales for the US, -8. This could be interesting. And core retail sales, -4.9. Well, nothing's been open. So, again, it's not really rocket science, is it? It just depends how the actual figures vary according to the forecasted figures. So let's just have a look at a couple of graphs before we finish here. So we've got core retail sales first, and let's have a look. So we've had a -2, so -4.9 that they're projecting there isn't too bad. That's going to take us down to about this level. You can see it there, it's just on there. But let's go back to the there we go, back to 2009. So actually we had -3 is the low for 2009 for the core retail figures there. And then let's just have a look at retail sales as well. And let's go back to 2008 and 9 as well. Somewhere around about here will do. -2.5 is about the area there for what 2008. So again, that's -8. Wow, oh, that takes us down here. Sorry, I can see it there now. Yeah, so yeah, that's massive. That's a record breaker, as the unemployment figures have been, and we're going to see this with a lot of the economic news. There you go. There's the projected figure down there, -8. So yeah, let's see how these come out at 1:30. It's all it's dire, but at the same time, there's a certain interest in seeing how these figures are breaking all of these records. And of course, as the lockdown continues, these figures are going to get worse as well. So that's at 1:30 p.m. So keep an eye on those as well, and the market's reaction. Okay, that will do it for this one. As ever, thanks for watching. See you in the next one.